Thursday, March 24th, 2022, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at how Putin has fired a financial nuclear weapon upon the West, in my opinion. We're also going to look at Rishi Sunak and the UK economy. He made some announcements yesterday, some small cuts in fuel tax. And yeah, we're going to cover that. Before I start, I'd like to thank all the viewers again, all the subscribers. Yes, we reached 60,000 last week while I was away in Switzerland, 60,000 subscribers. I've said many times, my goal here is not to have as many subscribers as possible, but to put out content that helps people navigate the financial world, the economic world. And by economic, I mean the original sense of the word, managing your household. And yes, thanks again for all the interest. And yeah, make sure you share videos that you like that I put out. Make sure you tell friends, families, and colleagues about my videos if you think some people might enjoy it. And yes, let's keep getting the word out about sound money, small government, freedom, all the good things, I would say. So back to Putin. So he announced yesterday, of course, some of you probably have seen it already, that Russia is going to switch to invoicing natural gas sales in rubles instead of euros. And why is that significant? Well, prior to what's happening now in the Ukraine, the invasion of the Ukraine about a month ago by Russia, yes, it would have been hard to do this kind of stuff. We've seen in the past people like Saddam Hussein trying to reprice their oil or price their oil in euros instead of dollars. And yes, here Putin is repricing or pricing, invoicing natural gas to European buyers in rubles. And you might think, well, it's not, the dollar is still around. Well, but this is just the first step, I would say. And it gives countries like China, for example, the confidence that they can do this. And I think this is very significant. And in terms of the petrodollar, the US dollar, and we're seeing already many people speculate that the petrodollar is going to wane, and it has been waning. We have a lot of countries like Russia, China, and others trading bilaterally with their own currencies. So there will be less demand for dollars, less demand for euros. I think what this means basically is that countries won't be able to push other countries around, especially the United States, for example, and make them accept their fiat currency printed out of thin air. They won't be able to run huge current account and trade deficits like they've been running for decades with no consequence. And what does that mean? Well, back in the pre-1971 days, if countries ran trade deficits, they'd have to raise interest rates or current account deficits in order to attract gold back into their country, and it would balance things out. Nowadays, there's no consequence, at least for the United States and its allies, of running huge deficits and even domestic budget deficits. And we're going to come to that in a minute when we talk about the UK. So I think that this is highly significant here, what's happening. And what does it mean? Is it a bad thing? I personally don't think it's a bad thing for the world in general. It will mean that countries and sovereign nations will deal with each other, hopefully fairly. They'll trade fairly with each other. They will pay each other with money and currency that is worth something. And that's why gold and silver are so important. Gold is gonna come back as a major component of this new multipolar world. And why is that? Well, because since 1971, we haven't had a real monetary, world monetary system. We've had like a racket imposed upon us. You take this piece of paper, or we will overthrow your government, or we will invade your country. And that's unfortunately what the United States has done. I'm not blaming Americans for this. I think the majority of the population in the US hasn't been aware of this. They think that they've been good world citizens, so to speak, but the real crux of it is that this is how the world has operated economically, financially, and commercially for the last 50 plus years. So what does this mean in the short to medium term for the United States, for its allies in the West? Well, we're already seeing it in the last year or so. We're going to continue to see a rising cost of living, rising prices, because there's going to be less demand for our currencies. They won't be taken as reserves by sovereign nations as much as they have in the past. And that will also mean higher interest rates. And why is that? Well, because a lot of times excess reserves, let's say that Russia or other countries accumulated in dollars, they would be recycled into US treasuries. That would create demand for bonds and keep interest rates low. And that's what we're seeing, the opposite now happen. All this will mean is that, as my dad used to tell me, there's no such thing as a free lunch. And that's what we're going to have to get used to. It's not the end of the world. So with that, let's look at what happened here in the UK yesterday. In terms of the budget or spring announcements by the Chancellor of the Exchequer here in the UK. So, and I'm going to talk about what I think really should be happening. So here you go. Sunak banks public finances windfall for pre-election tax cut. So he cut the fuel tax, what we pay at the pump, by 5 pence, which is really not that much. He's just tinkering around the edges. So there's a lot of people on both sides of the aisle saying, well, he should have helped the public more. Some people are saying he should move towards a more free market, small government kind of economy. And I tend to agree with that one. So I'll show you here the two sides of the coin in this debate. My debate, of course, or my view is that, unfortunately, we've been living in this world for the last 30, 40 years that people expect something from government. Almost everyone expects something, again, that free lunch mentality. And we've come to a juncture on the road where we can't do it anymore. The government is too big. It takes in more than 50% of the private economy in taxes. And it makes it very hard for the real economy, the private economy, to grow. And so you see here, this guy here, David Frost, only a low tax, low spend government can solve the cost of living crisis. I agree with him, but it's going to be very painful, unfortunately, but that's the only way. This one here, the Tories don't deserve to survive if they keep treating their voters like fool. Rishi Sunak's tax cuts are window dressing to hide the government's raids on middle-income Britain. So My view is that, unfortunately, we have to tighten our belts. Of course, there are always people who want something for nothing, and that's where the problem lies. I would say the best thing that could happen, and it doesn't sound like a good thing, is for people to realize the hard way. And the hard way, I think we're facing that right now. The hard way would be rising costs of living, as we're seeing now, the currency getting decimated, and then the country having to tighten its belts. Yes, there's going to be a lot of blame put around, but in the end of the day, what we need is a smaller government. We need the general public to realize that only they can help themselves, not someone else. Because when government helps the public, they're taking it from someone else, because governments don't create wealth. Does that mean we can't have a safety net for the less fortunate people in society? I don't think so, but unfortunately, these kinds of systems, welfare state, even the corporate welfare state, that needs to be sorted out as well. We need to stop bailing out the City of London. Unfortunately, they're prone to abuse. As Lord Acton said, power corrupts, and absolute power corrupts absolutely. And that's what we've had, the Keynesian mentality of big government. Oh no, we'll just do this. It's a one-off. We need to do it, or else everything is going to go bad. And we keep doing it, We keep digging the hole. And now we're almost at the bottom of the hole. And we need to get out of it. And it's not going to be fun. So enough of the preaching, so to speak. And let's look at where the markets are this morning. And we're going to look at how commodities seem to be picking back up. Yes, the stock market has rebounded. Bond prices did pick back up yesterday, but the trend that we've been seeing since the end of last year of a flow of funds from paper assets into hard assets continues, and it will continue, in my opinion, the next few years, especially with what's going on in the monetary sphere. A shift away from the petrodollar into a multipolar world. And President Putin's announcement yesterday, I think, was very significant. And all that will mean is that if you want to do business with Russia, you're going to have to basically, if you want to buy their gas or anything else, you're also going to have to sell them stuff, because you're going to have to earn their currency as well, or else you won't be able to buy their gas. So that's a pretty intelligent move, I think, by President Putin, because unless they lift all the sanctions and restrictions on Western companies doing business in Russia, they won't be able to buy a lot of the natural resources in Russia, and that's going to hurt massively. I think Europe depends on 40% of its energy comes from Russia, the natural gas, also food and grains. I think about 40% comes of things like wheat, and wheat comes from Russia, Ukraine, and Belarus. So that's the way things are going. So today we're gonna quickly look through, let's see, natural gas first. And this is the European TTF Dutch natural gas. So this is where it is right now. It's trading at 114. This is the intraday chart. That's today's chart. I'll show you what it's done, for example, in the last 2 years. Prior to 2021, or even during 2021, this contract was trading below 15, and now it's trading at 114. So basically, almost 10 times the price. And yes, we have been as high as 300 intraday. So, and yesterday we saw a big move in this because of the announcement. We also going to look at the year-to-date numbers here before we look at the prices. So we've got the commodity Invesco Bloomberg Commodity Index. Just give me a second. Year-to-date, as you can see, it's up almost 28%. We have had a correction since the beginning of March. Looks like we bottomed on the 16th of March, and now it's picking back up. Let's have a look at the miners, the GDX and the GDXJ. They are picking back up as well. So there's the GDX year to date, up almost 24%. We have had a shallow correction, and we now seem to be picking back up. So 23.9. A look at the GDXJ. Same kind of scenario. We were almost back up to the highs of the year, up almost 18%. And now I'm going to show you an ETF called TLT, which shows you what the bond market is doing or what interest rates are doing. We spoke earlier about the fact there will be less demand for dollars and Western currencies, and that will be reflected in higher yields, lower bond prices. So this is the iShares 20+ year Treasury bond ETF, and this is the price of it. And yes, it rebounded yesterday, but we're still down almost 9% year to date, which is a big move in the bond market. And that this means interest rates are going higher. That's going to affect credit card rates, mortgage rates, everything. So now let's go look at where the markets are this morning. The usual rundown. So let's get the screen up here so we can look at it. So right now it's 8:24 a.m. London time. Spot gold is virtually unchanged here, down slightly at 1943. High has been just under 1950. So looks like that's the resistance right now. Low's been 1937. Silver has traded below 25, has been frustrating for silver, but I think silver is still the most undervalued of all assets, commodities, paper, everything included. And I noticed that some people have been tweeting out how premiums for normal 1 ounce silver coins are very high in the States. I think someone showed that it costs about $40 to buy a coin that normally should cost around 25. So still very tight, the supply for real silver. So as you can see, the stock market is rising a little bit here. It had a bad day yesterday. I think the major indices were down about 1.3%. We're seeing a little bit of a rebound, as you can see here, up 0.5%. The Dow, NASDAQ up 0.75%, and so on. The FTSE is up 1/3. And to the currencies, well, we've got the pound down about 0.2 at 131.81. The euro down about 0.2 as well, just below 110. And the dollar is still very strong against the yen. So Japanese continue to inflate. We're at 121.50, and dollar down slightly versus the yuan at 638.18. Look at the other currencies here now. Aussie dollar down 1/3, 74.76. The dollar is unchanged versus the Canadian dollar, as you can see, 125.65. And the Kiwi dollar is down 1/3 as well at 69.48. General commodities, WTI crude. Yeah, crude picked up as well. I'm not surprised with that announcement, even though it was about gas. Yeah, WTI crude now 114.85. High's been 116.35 33. So no let up. Brent crude as well got up to 120 overnight. High grade copper making a pretty big move here too, back above 480, and US natural gas down slightly here. And to finish off, we'll have a quick look at the 10-year yield to see what we're doing overnight in the bond market. Just get the page up. So here we go. The 10-year is up 1.4 basis points. It's at 233. I think the high recently has been around 241. And yeah, the 3s 10 are inverted by about a basis point. Not much, but it inverted nevertheless. 5 10s as well inverted, and also 7 10s. The important one will be the 2s 10s. That's not inverted yet. And I don't know if you saw here some stuff about Madeleine Albright. She passed away yesterday. She was the woman, I think she was Secretary of State during, well, under the Clinton administration, but I think she was asked about the war in Iraq, the second, 2003 Bush invasion, and the fact that, or actually, no, it was about all the sanctions that the Clinton administration put on Iraq, and how hundreds of thousands of children died because of malnutrition. And she said, oh, that's an okay price to pay for our political objectives. So that's the kind of woman Madeleine Albright was. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.